Hi there, I'm Mark Sebastian, the founder of OptionPit.com, and this is the volatility report reminder. This is for educational purpose only. Should not be used for investment advice. It's none of that. Consult your financial professional. Well, here we are, and as you can see, we're in another spot. Take a look. The NDX is flat. The Dow's up about 55. The RUT's flat. The SPX is flat. But here we are. VIX is still getting a little bit of a bid. That squeeze, that twisting, squeezing roughness is on. Well, what's causing that? Well, bond market has been nothing but a disaster for the last 3 weeks. The dollar index, which is, if I pull up, the dollar index, look at that. Wow. I mean, that is just an absolute crushage of the dollar index. All right. And the dollar index is down again. And at some point that's going to stop, right? I feel like the dollar's probably finding its spot. But until then, the currencies, I mean, look at FXE. It's the euro is like 125. FXE is off to the races. You can see that. I mean, it's just been the speed with which that has moved has been utterly shocking. And it might move higher. As I look at currency, I think that there is upside. And that's kind of interesting. We had some earnings today that I think are driving things around. Caterpillar. Take a look at Caterpillar today. Let me pull up a tick chart here, folks. I mean, opens up big, tanked, rallying back. Just kind of a funky market. There's money coming in selling stuff. So this rally is being met with some hedging and with some squeezing of the volatility. All right, what causes that volatility squeezing? Option prices, obviously. So, a couple of things. There is a ton of open interest in this range right here that expires tomorrow. For a weekly, this is pretty heavy open interest. All right. We also have whereas take a look. This is the 31st, kind of the end of the month contract. There's, again, a bunch of 28.5, but not quite as much around it. We don't see a lot here. If I pull up the at the monies, this will make it easier. So you can see, get that at the money plus 2 strikes. You can see that 28.5 has a lot of volume, and then there's some at 28.40 on the Feb 2s. So, but then by the time we get to kind of the end of the month, look at the way open interest kind of dissipates. It really does. Even regular February, 16,000 contracts is something, but it's nothing insane. So even regular February seems a little bit off. So I think once we see these pieces start to kind of ease off, you're going to see volatility come in, and that squeezing nature relax. I mean, Monday looks like there's almost no pressure. So I think that we either see a real sell-off or the vol squeeze comes off by kind of end of day tomorrow. Sometime in the next week, we're going to see, I mean this, I think we're going to see a day where VIX goes from kind of where it is to probably 10.5 or maybe lower. That's the nature of the way the market is squeezing itself right now. And then as that happens, you're going to see just a chase to dump volatility, and you're going to see these VIX futures come off. As it is, I think that February is probably near the highs that we're going to see, and I would be a seller here. watch VVIX. That could also be another one where we see some of that pricing action. So during chat, I'm going to be looking at currency trades. I'm going to be looking at bond trades. I'm going to be looking at Caterpillar. I'm going to play around with this squeeze. I maybe set up some sort of trade for tomorrow that could absolutely pop things. All right, and then from there, I'll probably play around a little bit with VIX because that's what I do, and I will go from there. All right, folks, if you have questions, you can email me, marketoption.com, or call me 888-TRADE-01. Have a great morning.